Welcome to Cooking the Books. I'm Frances Cook. So the government has had a wee jiggle around of what's available to help first home buyers into their own home. But is it enough? We all know it's tough out there and house prices just seem to keep racing away. You've now got some extra places where you can get free cash to boost your house deposit. There are also some schemes that already existed that you can combine with these to try to get you over the line. So what can you get? And is it enough for you? Let's dive in.
Newstalk ZB presents Cooking the Books with Frances Cook.
I'm joined now by Lesley Harris from the First Home Buyers Club. Now, first of all, what do you make of the changes announced by the government? Do you think they'll actually help first home buyers?
It's a tricky one. I think what we've maybe done is we're running a marathon. We've put on a running shoe, one running shoe, and we haven't actually done up the shoelaces yet. I believe it's a step in the right direction, but really just a drop in the ocean in terms of actually what really does need to happen to make a real material difference to people getting their lending.
I know, it's interesting, isn't it? It feels like we're starting from so far back that it's going to take quite a bit. So would it be a fair summation that you think that this is a step in the right direction, but it's not going to fix things?
Oh, absolutely. I think a step in the right direction in terms of trying to get a few more people who actually qualify for, things like the Home Start grant and the first home buyers loan. I mean, step in the right direction. But we've got so much catch up to do in order to make some of these products fit for purpose. It might include an extra 100 or a couple of hundred people, who might be able to take advantage of these, but it's just not. It's not getting to the heart of the issue, which is actually a real multi-pronged approach with multiple kind of lenses. So it's not just about finding the housing stock. It's about actually helping people get their lending, get their deposit together. So I guess my question would be, what discussions have we actually had with the banks and the financial lenders here? How are we incentivizing them to actually want to maybe carve out this market and treat them a little bit differently? What discussions have we had? And I'm not quite sure that there's an answer to that.
Let's touch on a couple of those points there, because I think if people do qualify for these things, they might find them very helpful. So let's help people figure out if they do. I've talked a bit about the first home grant before. Of course, that's extra money to boost your deposit. It's $5,000 if you're buying an existing home, $10,000 if you're building, and that hasn't changed. And of course, if you're a couple, then you can both qualify for that and then pool your money, which is very helpful. But like you mentioned there, one of the things people have complained about when we've mentioned this before is that you're actually kind of limited. You can only earn up to a certain amount. You can only buy a house worth a certain amount. People felt really limited by that. And so they've lifted the caps now, haven't they?
In terms of the income caps, yes. But again, it hasn't been particularly well looked at. So I suppose to try and paint a positive slant on this, because people actually want to hear some good news. You can now earn as a couple up to 150,000. So that's going to include a few more people in this. But in terms of the actual first home buyers grant, it is only, if you're kind of going, wow, we've got that 5% capability in terms of deposit, you've still got to get the lending to buy the house. So, therein sometimes will lie some of those challenges that you talked about. So, look, I suppose let's just take a little bit of an example. If we had an income of around about the, let's just say that the 149,000, so right to the top of that, you would be able to potentially look at borrowing, say, up 550,000. So therein kind of lies the issue, if we're in an area like Auckland, is that what can you actually buy for that money? So, I would love us to keep talking about this and actually let's get those caps off. That's what I would actually really like to see, because it's like we need more money to get the lending, but then we're capped in terms of how much we can earn, because sometimes we're finding ourselves a little bit stuck between a rock and a hard place.
Mm. Yeah, it's interesting with the house caps because, of course, they got moved a little, but not very much. And of course, if anyone listening to this is trying to figure out what the house cap is, it does change area by area. So head along to the Kāinga Ora website. They actually have a quiz where you can see what you qualify depending on what you earn and where you live, and they'll break it down for you area by area so you can see exactly what your house price cap is. I think that's helpful. But those house price caps are still so low, right? It's there was an interview where they were saying it was the lowest quarter that they'd aimed those house price caps at, but I don't know, do you see any houses within those price caps? It's difficult.
Look, let's just take Auckland. I mean, the cap's been increased to 700. It's frustrating because our average house price now in Auckland is, well over the 900,000 mark. So we're really limiting kind of more towards apartments, townhouses, etc., etc. If you can find something under that 700 mark, they are out there, but they're few and far between, and they're certainly more on the outskirts, and they're more the apartments, they're more the 1 and 2 bedrooms. But look, I say whatever you can get something and get into the market. So, I have people ask often, do we wait and see if the housing market might cool off or prices might drop? What we're seeing on a daily basis is people having to actually make adjustments. They're having to go into those 1-2 bedroom apartments, etc., to get that foot into the property ladder with a view of potentially cashing out and cashing up down the track.
Okay, so maybe think further out, maybe think apartments, townhouses. I got to say, actually, personally, I'm quite a fan of townhouses. They can be done really well. So I think that's a good one to work within if you can find them.
And terrace houses as well, that there are. And the thing is, of course, if you get the new house, you're going to get, the $10,000 Home Start grant and potentially 20,000. So that's actually really helpful. And of course you can kind of use, a double income, etc., to get there. So we're trying to find means and ways of working with what we've got, because it is what it is. The rules have been set where they are. And although we're kind of all left a little disappointed, we've got to try and find means and ways around this and unfortunately work with what we've got.
Yeah, and actually what you mentioned there about, if you're looking to build, so many of the incentives right now, you can tell that the government is just everything that they're bringing in, they are slanting the incentives towards building. So you get more of a first home grant if you're building. You can also get better mortgage options. The mortgage rules are a little easier. You'll need less deposit if you're building. It can be daunting, right, to first home buyers, but something like a house and land package that makes it a little easier.
Absolutely. And a lot of the companies do a what they call a turnkey option. So you don't actually start paying for it until turnkey you've actually moved in. So those are the ones for first home buyers that we suggest you really look at, because you're not then paying rent plus all your building costs as they accumulate. So looking at those turnkey options, I think, again, on a positive note, we're also seeing all-time low interest rates. So if I'm to pluck any cherry out of the what I would call a bit of a crisis at the moment, all-time low lending rates. We're right down at that kind of 2% mark, just over 2%. We've never seen that before. So it does make things a little bit more affordable. And I think you could say that as house prices have soared, in terms of what you're borrowing, those weekly payments had also dropped because of the drop in interest rates. So being a little bit smart when you take out your mortgage, actually fixing it for a while so that that you're kind of, guaranteed, and you can actually pre-plan that that's sort of what you're going to be paying for the next couple of years.
Yes, exactly. I think a little bit of certainty can actually go a long way when you're trying to get through this and find your feet. It's a bit daunting.
It is really daunting. And, we just really sympathise. It is really tough. But on a positive, we are seeing people every week still get into their first homes. They've got to have reasonably good incomes. They've got to have low debt. So if I'm going to give any advice to people, at this particular point in time, is clear that debt off, because I think, Francis, we've talked about this before. People have got to realise that if they've got $10,000 worth of open credit cards there, or hire purchase debt or something like that, that's going to reduce how much they can borrow by $50,000. And that's a lot when you're talking about the 600,000, 650,000, you're getting at that cusp. So that last $50,000 is critical. So you've got to get first home buying ready. You've got to get rid of that debt. You've got to do your research. Look at those areas, on the outskirts of Auckland. There are still some, and post-COVID, everyone's working from home. We're all Zooming. We're all having these meetings. So we're seeing a change in the way that we work post-COVID. So you don't actually have to be in Auckland City anymore. So not necessarily. So once upon a time, back when I was buying a first home, it was how close can we get to the city, because, we need to work in the city. So there are a few sort of pearls of hope, I think, within the challenges that we find ourselves in.
Yeah. Oh, I think so. Absolutely. I mean, I don't want to underestimate how difficult it is for people, because, like you say, huge sympathy, but there are ways and means of working around it. And I think it's worth doing what you can to get yourself over that line. And you mentioned earlier the first home loans, which I think is a really important one for us to dive into a little more. So applying to get a mortgage with only a 5% deposit, which could be huge for many people, what do you have to do to qualify now?
Again, there are the income caps. So they have been raised as with the Home Start grant. So, have a look and see whether you qualify. First Home Buyers Club website's got it all on there. So you can sort of click on all the various links and see what you want to look at. So the income caps have increased. That's a bonus. But, probably not increased enough. And we're still kind of a little bit stuck in that place that bonus, yes, you only need 5%, but that will then lower the amount of money you've got to buy the house at the end of the day. So again, if let's just say you're looking at a $500,000 mortgage, you still need that $145-ish thousand combined income to get there. And there's not a lot around, at that price bracket. So unfortunately, we're kind of stuck between banking criteria, which is you've got to earn a lot to get a little bit of lending, I suppose, in summarising. But then on the other hand, we've got these caps in terms of how much you can lend. I hope they just do away with the caps, personally. I hope at some point we do away with the caps and the restrictions around all of this stuff, which is what I was saying. Would be great to see a carve out of exception for first home buyers around caps, around things like gifting deposits. We recently saw, it was a family of maybe four siblings, friends, gifted the entire deposit. Income was over 400,000 declined because they couldn't prove that they'd saved enough proportion of the deposit.
Yeah. So the banks often want you to have saved 5% by yourself at least, right? Even if you've had some gifted.
That's right. And look, there's no absolute rule around this. They're not going to come and say, this is the magic number. But unfortunately, you can't be into a false sense of security of, if we've got parents that will give us the deposit, we're right. Well, you've got to still be seen to be able to save, and you've still got to be able to service the mortgage. And I do get it from the bank's perspective too. I'm not criticising the banks. They're also looking out for their customers and making sure that people can actually afford, the debt that they take on, and not going to be put under, financial pressure, strain. So yeah, no, you're right. First home grants, first home loans, 5% to get in, but you've still got to then be able to borrow enough to get the house that you want. And that can be the little bit of a challenging bit at the end of that, what sounds like an amazing opportunity.
Yeah. Yeah. And then, of course, when we talk about that 5%-ish, whatever the particular bank wants to see, that they want to see that you've saved, that does, of course, though, include your Kiwisaver. Because I know I've mentioned that before, and some people said, oh, but I'm only using my Kiwisaver. That's cool. That's your savings. That's all good.
Absolutely. So they still deem that as savings. So that's not carved out. So, if all you had was your Kiwisaver, that's still fine.
And I think that's how most people do most of their savings for the deposit, right? So let's do a quick run through of how does it work? How much can you withdraw from that? And do you have to jump through any hoops to access it?
I mean, you do have to prove that you're a first home buyer. My understanding is there's no kind of caps around how much you take out. So again, you would need to just obviously investigate that through your, your lending, your person who's doing your lending. But you should be able to. It is your money, and it is one of the things that you should be able to do is actually get that out for a first home. So my understanding, not a huge amount of hoops there. So you've got to be in Kiwisaver though, for any of these things too. So I suppose that's the hashtag little loop, is that these things are all there for people in Kiwisaver. I'd like to see them for everyone, regardless of Kiwisaver or not, but currently it is quite linked to Kiwisaver. So if you're thinking about buying a first home in the future, you must get yourself into Kiwisaver, because some of those regulations are you've got to have been contributing for 3 years, consistently contributing for 3 years. So that could be seen, I suppose, Francis, as a little bit of a loophole or hook. So you couldn't have maybe, had Kiwisaver in there for 18 months and want to take it out.
Yeah. And I think you're spot, excuse me. I think you're spot on there with get into Kiwisaver, because that boosts your deposit straight away, because you've got your employer contribution. That's like a free pay rise. I mean, don't ever turn down a free pay rise. You've got the government tax break. This is all boosting your savings before any, your Kiwisaver can also earn you money, but you're boosting your savings before any of that even happens, right? So it can be really powerful for saving.
Really, really important, and I just can't stress that enough. For both my children, I'm stressing it now. Gosh, you've got to be in Kiwisaver, even your part-time jobs at school, and this is the kind of financial education that we need to be doing to our to our families and for Kiwis, is actually so they don't get those loopholes that we've talked about down the track of not being in Kiwisaver or having a whole lot of debt. They've taken out hire purchases, they've taken out credit cards, because let's face it, it's damn easy to get. Everyone can get them. But buyer beware, that is going to impact down the track. You being able to actually get the lending level that you need to actually, and every cent counts at the moment in terms of what banks will lend you. We're finding that people are needing to lend the maximum that they kind of have, because again, we've got this all-time high house prices nationally.
Oh, exactly. And you mentioned there about, it can be a little confusing for people. I do think the Kiwisaver scheme, they try very hard to make it simple, and there aren't too many hoops to jump through. But if you get confused, you pay your Kiwisaver a fee to look after your money. It can be bigger or smaller. I always hope that people get the smallest fee possible. But, you're paying a fee of some sort no matter what. That means they should help you if you get it all confused. Just email your Kiwisaver provider and say, do I qualify yet? What would I need to do? And they should definitely help you. They have an obligation to you, right?
Yes, yeah, absolutely. And, I sort of say you've got to be an expert. You've got to train yourself up. You've got to be an expert. The information is out there. Yes, it's daunting. I suppose that's why we do the work that we've got that website. It's free to join, go on there, join up. You've got access really to everything that you need to know, how to withdraw your Kiwisaver. Where are some of these developments, around some of the key city centres that perhaps are in that more affordable bracket. So right across the board. How do we get finance? How much can we borrow? Because it's really, really daunting and it's hard. But you can actually, knowledge. They always say knowledge is power. Get upskilled, be an expert in buying your first home, be an expert in the areas that you're looking to buy in. Where's a great place to buy that maybe is a little bit untapped? Maybe it has it's a little bit lower than some of the others, but maybe there's a school coming, maybe there's infrastructure, transport, buses. So look for some of those kind of areas around.
And I think you're spot on as well about when you were saying about, we're all Zooming and stuff now. A lot of people since COVID have kept 2 to 3 days a week of working from home, myself included. And that just, A, reduces the transport costs. It means you can live wherever you want to live. It opens up your options. I just think you've got to look at the situation and see how you can make it fit for you, right? You've just got to think a little sideways.
Absolutely. And you've got to be persistent in, right, what can we find out of this, these changes? What's in it for me? What's going to actually help me? And as I say, people are still getting into their first homes. It isn't all doom and gloom. We're seeing people on a weekly basis get into their first homes. They're having to do things different. We're seeing different forms of home ownership. We're seeing groups, families going in together. We're seeing shared equity type programs, coming to light here in New Zealand. We're seeing different ways of living. I mean, we're seeing things like apartments with carpool cars. It's not what it was, but we do need to look at ways in which we can live, we can work differently moving forward. And I do actually think that COVID has changed things for us all moving forward in terms of that work flexibility, and flow on from there is where you actually need to live, and technology along with it too. Who'd heard of Zoom two years ago? So.
I know Zoom was something that I always put off before because I would just too hard basket. And now here I am doing interviews over it. So here we are. All right, to sum up some of your excellent points. So look into the first home grant, look into the first home loan, consider going further out and those sort of alternative houses like apartments, townhouses, that sort of thing. Consider building. There are good turnkey options. There are good house and land packages. And of course, get sorted on your Kiwisaver. And if it confuses you, talk to your Kiwisaver provider. Oh, and your other excellent point, to get rid of other forms of debt, which is very true, and it counts against you in ways people don't expect. All right, was there anything else that bears mention, do you think?
Probably just to that point as well, Frances, just to reiterate to your viewers, so getting rid of the debt means actually getting rid of the account. So some people think they've got a credit card, they've paid it off. That's clear. It's not how the bank sees it. So if you've got a $10,000 limit and you don't need it, reduce it. If you've got if you can work on $1,000, limit on your credit card. If you've been given a massive, big, whopping credit card limit of say $20,000, let's just say $20,000. That's going to limit what you can borrow by around about $94,000, even if you haven't used that limit. So that's a really, really, really important one that people are, so many people aren't aware of this, but it's about the limit. It's not about what you've used.
Yes, and that's a really good point on that one. Thank you so much. That's Lesley Harris from the First Home Buyers Club. Now, if you have questions about this podcast or anything else to do with money, we did try to cram in as many of your questions as possible into this episode, but there's always space for more. Send them to me, Facebook Frances Cook Journalist, Twitter Frances Cook, Instagram Frances Cook NZ, and I'll try to get them onto a future podcast for you. Now, you can also subscribe to Cooking the Books podcast so that you never miss an episode, or also you can go back and check older episodes. You never know, we might have answered your question before. Pretty much everywhere you find podcasts, including iHeartRadio, Apple Podcasts, and Spotify. Until next time, have a great day.